Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And a lot of you guys have been asking me this question that Shashank, how do you find fundamentally strong companies? How do you find the next multibaggers? What is your screener? How do you pack all of this up? And what do you look at when you evaluate a company? So today I'm going to give you a step-by-step analysis on how I screen companies. What are my variations of the screen? So let's quickly begin. Now first we'll go to a website called screener.in. Very simple, right? And here you click on create a new screen. Now, if I want to just look at the investable universe and find out good companies, we will have to put a market cap filter, and I will say market cap above. I usually keep above 1000 because my risk is quite high. But if you are not a risk taker, you can change it to 5000. So market cap above 5000. Then I would say operating profit margin. Now this is very, again, controversial and picky. I prefer companies that are operating at least at 10% operating profit margin. Now please understand, the screener I am building, this one is for good companies, not for companies that are going from 8% to 15%, the turnaround companies. That I'm not doing. I'm doing some companies that are already good, already amazing, and next 2-3 years they should continue being amazing. So operating profit margin about 10%, because below 10%, if you're operating in a margin perspective, then I'm like, maza nahi aa raha hai. I'm not very happy with that, right? Now, coming to return ratios, or they call it efficiency ratios. So here I want return on equity, okay, which is at least better than 12%. Now here also I will show you a variation. Sometimes I go above 12%, sometimes I keep 12%, but depends on company to company, right? Next, what I do is I basically look at sales growth. Now sales growth is very important, and I want a 5-year trend of sales growth. This I will not keep it very stringent. I'm going to just say 10% sales growth over a long period of time. Another thing is, a lot of companies grow their sales, right? But PAT doesn't grow, which is profit after tax doesn't grow. So that becomes a problem for me. So then I say EPS should be greater than EPS last year. Very simple. That means, boss, last year to this year, you have grown with respect to profits, and your earnings per share has also gone up, because I don't want your dilution companies and all to completely go away from the screen. Okay. Then we do debt to equity ratio. Now see, if I do this, all your banks will go out of the question, but I want to keep debt to equity ratio less than 1.25. Ideally 1 is ideal, but I'm just going to show you one screener and I will refine it in front of you. So what we've done is we've taken market capitalization, we have taken operating profit margin, we have taken return on equity, sales growth 5 years 10%, EPS greater than EPS last year, debt to equity. Here another thing we can add is return on capital employed greater than 12%, again similar to ROE math. So this is basically what I've done to right now understand whether we will get good companies or not. I don't know, but let us find out if this gets us good companies. Let us do a quick run. Now see this. This has got me 262 companies in this entire frame, right? Now that's a lot of companies, and if I filter according to market cap, it has gone from obviously TCS, and the last company would be the 262 companies, something called Mamta Machinery. So it has given me all these companies. If I just go and check with respect to ROIC, which is return on invested capital, you will see tips coming at 157, Ashok Buildcons, all of these companies are there. And if I just go here and see their operating profit margin, again from top to bottom, again to see who's operating at a much better rate, I will again see operating profit margin. Highest will be IEX, AMC. So all platform business are coming here. But good, right? Now, free cash flow also, again, not a necessary screener, but if you really want to see free cash flow, you can check free cash flow here. But again, that's up to you. Doesn't mean free cash flow means great company as of now. But this is giving me 262 companies. Now, I don't want 262 companies. Time though I don't have to check so many. Yes, if I really want to do a fundamental screen, this is one of the best screens, right? Because if I go from down to up, let's say bad market cap to good market cap, I will get a lot of companies. And you see, I've only clicked and I started reading on a lot of these companies, right? To understand more and to understand what is good, what is bad. So I go and do a deep dive into all of this, right? Even if I look at the big companies, you see Trent, Varun Beverages, HR Motors, all of these come. Here you can add a P ratio filter if you want, because you don't want companies like Trent. No problem. We can do price to earnings less than 60. That means most of your universe should go away. Very less companies. Only 221 companies now compared to 242. So barely anything went. Now let's refine this. What I will do is I will go and say return on capital employed 14%, right? And I will also increase the return on equity and capital employed to 14%. And now let's look at the numbers. Now it has come to 189. Then I will say, look, I am a slightly aggressive player. I don't want to invest in large cap. I want to invest in mid cap and small cap. That will become a large cap. So here I will go put another market capitalization filter and say, show me companies that are below 40,000 crores and above 1,000 crores. Now I'm plainly playing mid and small cap. and not playing large cap because I want to buy companies today that can grow really well. Now I get 157 companies. Now look at this. From 242, we have eliminated almost 100 companies here. Now these are some really good companies that you should sit and read. Okay, because these are a list of good companies from 40,000 crores and downwards. For example, if I just take some random company, there's so many companies here. Okay, so I'll take e-clerk services. This is something that I've been reading about. 34p. So that means the P is not out of your 60 parameter, right? Very good ROE and ROC. This company is in the BPO space. 19,000 crore market cap. 1 year return 45%. 10 years compounded annual growth rate has been 16.6. And if I look at the chart, this has been growing like this. Now you see how I found a growth company that has come into my screen, right? Okay, let me go back. Let me take some other. Now, obviously not all companies are like very clean and very good. You will find some weird companies, but my job is to find good companies, right? Look at this. BLS International Services, 27p. Again, this is not a recommendation to buy or sell. This is only for you to learn. Last 10 years growth rate is something like this. It is in that growth path right now. Yes, now I have to still go and see that has the margin expanded, is the margin falling below. So all those things are there. Now there is another way to refine this even more, but you please understand, whenever you refine, you will lose a lot of companies. Okay, so when you refine, you have to be careful. Now I can say that operating profit margin I will make it 12% or maybe 14%. I want very good companies that are sitting at high margins. Okay, ROE 15, ROCE 15. Okay, and I will say sales growth 12%. And let me check this out now. Now I have only 100 companies that I'm evaluating. Now, if I want to remove my risk from the bottom end of 1,000, I can make this 1,000 into 5,000. So only 5,000 to 40,000 companies show me. Only 60 companies come into this picture, right? From top to bottom. And here you will find a lot of companies that are fundamentally very strong. And these are companies that I don't obviously invest in all of them. I make a list and I start reading them. You see here, almost 90% of these companies I have already finished reading. And I already know what is good, what is bad, what is playing out, where is it pending. All of that I have already figured out here. Because these are strong companies that are sitting with good fundamentals from top to bottom, right? So that is basically how I screen these companies. Now coming to a different screener. This was a strong fundamental screener. Now, I also have a cash flow screener. So look at this. These are my cash flow companies. Very good cash flow. Now cash flow means what? Means अच्छा पैसा आ रहा है company में. And they're not maybe investing in a lot of companies, right? Now cash flow doesn't necessarily mean good companies. But when you see cash flow companies, you usually find platform plays. So what is my screen here? Cash 7 years back, cash 5 years back, cash 3 years back. So I'm saying it should be above 100, above 150, above 180, above 250, and cash 3 years back should be greater than cash 5 years back, should be greater than cash 7 years back, and P should be less than 40. Again, this you can change to 60, and operating profit margin is 10. I can change this to 12 if you want. Run this query and you will see 94 companies have come here. Again, from top to bottom, I've not put market cap filter, so you will not see it. But if you actually put a market cap filter, you will see that there are some companies that are giving very good free cash flows. Right? Again, BLS International comes here as well. So even in that first screen, if you want to even make it more refined, you can copy paste this entire screen. So I can go back here. Okay. Go copy this, go to my funda screen, put an and here, paste it. Okay. Because I think now these two I will remove because I've already put OPM on top. Now let us see how many companies come. Okay. Remove this and. See, only 22 companies, that too with has a huge market cap filter. If I remove the market cap of all the large cap companies and only focus on market cap less than 40,000, I will only get 12 companies in the market that are both cash flow positive and good fundamentals and everything works well and very high premium on ROE and ROC. But as I told you, free cash flow does not mean great companies. Free cash flow also means that they're not investing very well into their own system, right? But this basically gives me an idea of these 12 companies. Most of them will not be investable. Some of them might be good. Some of them might be not that great. So I would not mix these two. Honestly, I would keep them separate. But this gives me a better understanding of both, right? Now, another screen that I currently have is a funda correction screen. What is a funda correction screen? What I do here is I have put my fundamental analysis screen, which I already showed you. This is my variation number 3. But now let's say the market has fallen, right? Market has fallen nicely. Now I know these are good, fundamentally strong companies, but I am saying all that is great, but find me companies that have fallen 20-30% from the top. From their current price, from their all-time high price is like anywhere between 20% or 30% down. Okay, or between 20 to 30 or between 30 to 40% down. Show me that. And when I run this screen, it shows me fundamentally strong companies that have actually fallen down. For example, if I look at tips as an example, it'll show me that this has fallen down from its all-time high, right? Obviously, I'm not saying you should go and invest in this, but this basically gives me an idea. Okay, see my KPIT is here that has fallen down quite aggressively. Zentech, fundamentally strong, but recently fell down. So this gives me an idea of what, if I want to accumulate some companies, this gives me an idea of what to look at, what has actually fallen down. Like look at Polymedicure, another multi-bagger, which has been there for a very long period of time. If you see this, now this has also fallen down quite deeply, right? Now I go and start reading about these companies. Because now I don't have to read 200 companies that are good. Now I'm adding good companies with bad times, right? Good companies with bad times. And I'm trying to do a research and analysis on that to see what is happening with this company. Is this a big fundamental problem? Is this doing a rebound, or can it give me an opportunity in the future? This screen basically helps me with that, right? So this is basically what I add, which is the current price filter from all-time high. And then I add my fundamental screen. Now again, here I put OPM as 15. I can make this as 10, right? I can go back a little bit and get 75 companies. I can put a market cap filter if I want. It is about 1,000 as of today. But these are companies that are considered good but have taken a massive beating from the market. So whenever the market goes down, whenever there is a correction, I keep some of these companies. So by the way, I have read all these companies, right? The fundamental screen that I showed you, I have read each and every one of them, and I keep looking at them to see if something new is coming out every quarter, because I want to know what are good, what are bad. Automatically, even from that list of 150 companies, you can eliminate half of them or maybe 80% of them. Only 20% will remain. And now I'd like to invest for long term in that 20%. And I usually play in a lower market cap. Also because I'm RA, we have a swing trading advisory going on, a swing trading cohort going on as well. So that is going on. So because I have the swing trading cohort going on, I cannot trade in a lot of companies myself because of the RA rule that 30 days before and 5 days later, you cannot trade in that company. So I usually play in the smaller market cap zone for long term, which I would never anyway recommend, or I would never put a report out for my audience, right? So that is basically what we do. Again, for all the people who don't know about the swing cohort, I will announce it very soon for the public, mostly around September end. Right now it is only open for the members only, and it has been closed also. So we got a good response and all that is done, right? But again, if you like this video and you enjoyed it, and if you have any more doubts or questions on the screener, let me know, because I keep reading all your comments and I understand what you guys are asking for. And whenever you ask for something, I try to come and give you a very nice video on it. So I hope you guys enjoyed this. I hope you guys like this. This is me, Shashank Udupa, signing off, guys. Take care. See you. Bye-bye.